Bitcoin has smashed another new all-time high today, extending what is already an incredible run for the top crypto asset. But is it time for Bitcoin to finally chill out a little bit after its massive run? Well, just maybe, but your chances of getting Bitcoin under $20,000 are starting to look increasingly slim. And in spite of the new Regulation FUD out today, Bitcoin actually pushed higher, underlying the bullishness of the market. And we had even another big investment fund announcing that they are buying Bitcoin. It's crazy. Institutional FOMO out of control right now. The honey badger has been completely unleashed. It's wild times in the market. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the crazy markets. By the way, if you want a great place to trade Bitcoin and Ethereum, Cardano, Polkadot, Chainlink, and a bunch of the other top cryptocurrencies, then you should definitely check out Femex. It is the best exchange to long and short all of these top cryptos. It even offers zero fee spot market trading. And as a special bonus, if you sign up using the link down below in the description, then you can even get up to a $720 Bitcoin bonus to use on the exchange, depending on how much you deposit onto the exchange. So definitely check that out if you are a trader, and you do need to act soon, as the $720 bonus does end soon. And as an extra bonus too, you're gonna get 10% off the fees by using the link down below in the description. So check that out if you are a trader. Now, that being said, let's talk about Bitcoin. Bitcoin staged another big breakout earlier today, blasting over $24,000 a coin. We are now 20% over the all-time high of 2017. I mean, just think about how insane it is that all of a sudden Bitcoin at $20,000 is considered cheap. It's nuts. Market moves so fast, man. Just last week, Bitcoin at 20,000 was considered to be expensive. We're buying the top. And now everyone is like just praying for Bitcoin to drop back down to $20,000 to be able to stack more cheap Bitcoin before we blast off to the inevitable $100,000 and beyond range. Life comes at you fast in this market. It's wild. With all of the hedge funds and the billionaires buying Bitcoin, we could just keep on pumping for weeks on end. It's definitely possible. But one thing is for sure, anyone who bought Bitcoin under $20,000, you have now achieved legend status. So well done. And that if we do see Bitcoin go back under $20,000, man, you got to buy that dip. That's what you got to do, man. Buy that dip under 20K. Last bull run, after we broke the previous all-time high, the price only went back under just one time. One time, only once, one chance to buy a final dip before we went to the moon. The bull run before that, the price never went back under. And who knows what's going to happen this bull run? We could have a long time under 20K for all we know. But again, if you see Bitcoin under 20K, you get that because it's likely going to be one of your last chances to ever get Bitcoin that cheap. The market is changing in a dramatic way right now, so understand that. Pretty soon, buying Bitcoin under $20,000 is going to seem as absurd as buying Bitcoin under $1,000. The market's changed, man. You need to adjust to that new reality. But Bitcoin did just put in a bearish divergence on the 4-hour chart, with the price rising while the RSI was falling. So it is possible we do see a slight correction, or at the very least a cool off after the big run that we did see over the last couple of weeks. Now, what would be great to see happen will be for Bitcoin to actually pull back down, maybe even retest $20,000 as support, flipping that critical resistance into support before blasting higher. That would, though, require a dramatic 15% drop from where we are for that to happen. It is possible, so it'd be great to see if it did. Great chance to buy if it does. What I would actually like to see is for Bitcoin to start consolidating in this range up here. We've had a very strong crushing of the all-time high, so you can chill. You can take a breather now, Bitcoin. It's very definitive. We all know the honey badger, very powerful. And you consolidate a little bit. It'd be great. You can see that what usually happens after we get these $1,000 plus daily candles is that Bitcoin actually then tends to take a breather for a few days or even a few weeks, actually it tends to be a time when we do see a consolidation coming in. Hopefully we see that happen, but obviously the market remains stupidly bullish right now, so any dips that we will see are going to be bought as aggressively as we've seen them being bought for the last few weeks. Remember, we still have a new US stimulus package coming soon, so when we do get that announced, expect more market pumping to happen. Today we also had an announcement from a company called Jefferies. Now, this is an investment firm with around $51 billion in assets under management. So they're kind of big, not the biggest, but pretty big, right? Well, they've just announced their Bitcoin play, joining an ever-growing list of financial firms buying Bitcoin, man. They have announced today that they are cutting their gold position from 50% of their portfolio to 45% of their portfolio and taking a 5% position in Bitcoin. They have also said that if Bitcoin has any significant dips, that they will be increasing their Bitcoin exposure. So you have to remember, anytime there's a dip, you're fighting with giant hedge funds to get a little slice of that pie, which means the dips are going to become less and less dramatic because we're going to have so much buying pressure coming in, gobbling up that Bitcoin anytime it has a significant drop. Now, it was not immediately clear from the article how much in dollar value was actually invested, how many Bitcoin they actually did buy, as it only applies to their long-term investment portfolio. But I suspect at a minimum, we're talking tens of millions of dollars here, possibly 100 million or more. It will be a significant amount of Bitcoin, even at 5% of that portfolio. But what's really just striking about this is just so insane for me watching institutional FOMO happening right now before our eyes. Tell anyone a year ago this was going to happen, they probably think you're crazy, but this is exactly what's been happening. In 2021 is going to see a lot more of this happening. I don't know who's going to be the next big buyer, but it's definitely coming. Next up, I want to bring your attention to a hot new blockchain called Marlin, which is a purpose-built chain providing a high-performance programmable network infrastructure for DeFi and Web 3.0. Highly scalable, highly decentralized, and also bringing in privacy-preserving features. Now, this is a very interesting blockchain, which is actually being backed by some really, really big names as well. They've got Arrington Capital on board. They have Binance Labs on board, so we could probably expect a Binance listing out of this as well in the future. So that should be another big catalyst for it. I expect this one to perform quite well in the market. Anyway, the reason I'm bringing it up is that their Flow Mint program has gone live. So they're going to be dropping 20% of their total supply of mPond tokens to stakers across popular staking networks. So if you're already staking with a popular chain like Cosmos or Matic or Polkadot, a couple others like Near and stuff as well, then you can also be earning the mPond tokens in addition to your staking rewards that you're already getting from staking on that chain. So it's just an extra bonus on top of that. Now, these airdrop tokens, they can turn out to be very, very profitable, and you're literally going to be getting them for free just by participating in the drop. So there's really no downside for you here. Now, I'll leave a link down below if you do want to check that out. They'll have some more details about how you can participate in this stake drop program. But free tokens, man, definitely worth looking into Marlin. So on to now the big story of today, which is that the new rules which were proposed by the US Treasury are being pushed forward. We do have some more information about those. So the proposal said that it would not be required for exchanges to keep track of withdrawals and deposits under $3,000. So everything over $3,000, they need to keep track of all that. Anything originating from or going to a non-custodial wallet will need to be reported. So you're going to need to provide proof of ownership of that wallet by providing your personal details and then linking them to that Bitcoin or Ethereum or whatever address, or perhaps to the details of the person you are sending the transaction to. And if the transaction is over $10,000, then exchanges would have to report directly to the Financial Crimes Enforcement Network, or FinCEN. Now, this move is definitely going to turn exchanges really more and more into just crypto banks, right? I mean, they already are crypto banks for a lot of purposes, but this is going to be even more, since it's going to really now provide a very strong incentive for users to just keep their crypto on the exchange, where they've already been KYC'd and all that stuff, right? Many people are already too lazy to withdraw their Bitcoin from the exchange and to store it on their own wallet. So this is only going to make the incentive to stay on the exchange even stronger, as it's going to introduce a whole new level of barriers for withdrawing your crypto to your private wallet. Either that, or we're simply going to see a lot of transactions for $2,999. Probably also going to happen. Basically, this is just another ridiculous law designed to create more hoops for users to jump through, but in the end, it's not really going to matter all that much with the general public commentary closing on the 4th of January. It does seem that there is a strong intent to just basically blast this law out as quickly as possible before Trump leaves office, as this 15-day submission period for the public, it's actually less than the usual 60-day period, so the intent is just like, get it out there. We already have the rules we want, just nail them out, get them into the law, and make it happen. Now, this rule, by the way, only affects unhosted wallets. So if you're transferring from exchange to exchange where you've done KYC, then it should be, pretty easy to do, as easy as it is to do right now. But if you want to withdraw or deposit crypto from a wallet to which you control the private keys, then you're going to have to jump through that extra hoop to be able to do that, as well as, of course, the privacy aspects of needing to dox your address to authorities. But again, none of this should be a surprise for us, as this has been coming for more than a year now, ever since the Financial Action Task Force recommended these policies in 2019, so it's been coming for a while. Also, to be clear, this is not going to be trying to impose KYC on wallet-to-wallet transactions. That's, of course, not really even possible for them to try to do. So once you've basically jumped through the hoop of getting your crypto off of an exchange, you can then transfer that crypto to another wallet wherever you want. So I suspect that in the future we will see some more laws coming in around this to kind of make sure that you can account for where the funds came from, but for now we don't see that. Anyway, this is just another dumb law from dumb regulators. It's not going to actually stop illegal activity, which is the purpose of this proposed rule, right? But as we all know, almost all of the criminal activity happens with dollars. And all the regulations in the world hasn't done anything to stop that. In fact, the banks are usually the ones who are the most complicit in the crime. It will just force more burden on legitimate users like you and me, which sucks. It also really kills the financial privacy of crypto, since you're essentially doxing your crypto accounts to the local authorities. Then all that doxed info ends up getting held on centralized servers, which, obviously are going to be hacked at some point, as always happens. And the proposal, of course, also very vague on how compliance should actually be handled. So just that there should be some kind of compliance. Anyway, long story short, I think the sentiment from the industry in terms of really caring about the impact of these regulations can probably be best summed up by the fact that Bitcoin actually went up on this news, smashing through to a new all-time high. This didn't do anything to spook the market. This kind of regulation is burdensome, it's unnecessary, but it's coming, and it's not going to stop crypto and Bitcoin from going to $100,000 and beyond. If anything, it just makes the industry more serious, right? Anyway, your question for today. Do you think we are going to get a chance to buy Bitcoin under $20,000 again? Or has that ship sailed? Let me know your opinion on that down below in the comment section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.